Welcome to Policy on Demand. I'm Sindhu Blume. The conversation about OB3, or the One Big Beautiful Act, and its implications continues. And today, we're going to focus on state and local tax. With state corporate tax rates topping 10%, OB3 changes could shift effective tax rates by millions, and states are already reacting. Joining me to get into this are Tina Skidmore and Caragh DeLuca from PwC State and Local Tax Practice. Welcome to you both.
Thank you. Great to be here.
So I want to start with kind of an overall perspective from both of you. You know, we've been exploring implications of OB3. So what, on a overall level, but how would you describe the SALT implications? Tina, let me start with you.
Yeah, from a high level, right? States have been challenged on their budgets for a while, right? And the reductions in federal funding from OB3 to social programs is only making that challenge greater. So as you think, and as you said, state rates can be as high as 10%. So with those high state rates and the reduced funding, states are challenged. They're going to have to respond. And so what's important is that we are able to understand how they're going to respond and what they're going to do. So far, only one state has come out with legislation. That's Colorado. So they had emergency legislation. Colorado estimates that the impact of the reductions in federal funding is going to have a $1 billion budget deficit for them. And so as they're looking at it, what they've responded with is they've looked at FDDEI, and they're going to not conform, and they're looking at tax havens. So they added countries like Ireland, which we typically have not seen before, as a tax haven in their traditionally water's edge tax return.
Okay. Caragh?
So I think in addition to that, some of the areas we're thinking about is the SALT cap, right? So obviously with the SALT cap remaining, PTET, pass-through entity tax, benefit surviving. It's really a big focus for the states and for the taxpayers, right? And so one of the things we're seeing, in addition to just the budgetary issues the states are facing, it's the tax migration. We're seeing high net worth individuals, we're seeing individuals in total shifting to where they're living based on like tax rate. They're thinking about no tax jurisdictions, low tax jurisdictions, and that's putting another strain on a lot of the jurisdictions.
Okay. And Tina, let me come back to you for this question. So what are some of the major issues and also opportunities when it comes to how SALT is impacted?
Right. So when you think about the states, right, the state implications or the issues are very similar to federal, right? States are going to be looking at interest limitations, R&D expensing, depreciation. How is that going to be treated? The matrix of state conformity as it relates to the Federal Internal Revenue Code has always been complex. But now when we think about the new legislation, how the states are going to conform, not conform, it's going to be really important for tax departments, but having the state tax professionals at the table, right? The modeling, being able to give the advice to your businesses on a real-time basis, especially as we see the states like Colorado start to respond. It's not all bad news though, right? So as we think about the acceleration of capital back into the United States, there's a real opportunity from a state and local perspective, thinking about statutory credits, negotiated incentives, where's that capital going to be placed? Again, as state tax professionals, having that seat at the table and being able to give that advice to your business as they start to think about, hey, where should we be? Where should we be located? Let's make sure that capital is in the most tax efficient location.
And Caragh, before I come to you, and maybe you could answer this question as well, you talked about modeling in your conversations with companies. How much of that is going on right now with respect to state taxes?
A lot, right? Especially, you know, as you're thinking about corporations and their third quarter provision, what it means as they're thinking about the year-end provision, right? Trying to set up a model that's flexible and can give, so they can react quickly and be able to predict what it's going to mean for their company.
Right. Okay.
I think, and to build on to that, when we think about PTET, there's a lot of opportunity there, right? Obviously a lot of benefit that people want to take advantage of and maximize, but there's a lot of coordination. There's a lot of teaming that requires, right? If you think about it, the deduction you get the benefit for on the federal partnership return.
Right.
But in order to make those payments, to be able to get that credit, you have to calculate that and report it on the state partnership return. And then the true benefit lies on the individual's return. And so just that coordination alone takes a lot of planning and thinking and modeling. But then you add in the accounting part of it, the books and keeping all all that in track, thinking about the cash flow. Who's making those payments, having the cash to make those payments, the company becomes the responsibility for that. That's all really important to kind of plan through. So that brings a lot of the different departments within the company, to strategize against that. And additionally, strategies for that, excuse me. And then additionally, you have to think about your trends in your business. Are there going to be transactions? Are you doing any mergers? Are you thinking about just the ordinary course of your business? Have you expanded to other jurisdictions? All that planning becomes like really critical in order to ensure that you can make those elections in time.
Okay. Caragh, let me stay with you about the state landscape and how it's going to be evolving in reaction to these changes, because I imagine companies are, if they haven't already, they will be looking at the next steps they need to take. And so what does that landscape look like?
So I think some of the things that Tina and I both are seeing is that some of the states aren't necessarily completely set up for some of these changes, right? And so some of their legislation might have expired. They may have been temporary. They may not conform. So those are things that we have to keep an eye out for, right? Another piece, when you think going back to PTET, some of the states still hadn't enacted a legislation around that. So now they have to be thinking about that as it looks as a more permanent opportunity and for them to be in the playing field with the rest of the jurisdictions around them. And I think lastly, before Tina kind of brings some of her point of view in there, is thinking about the expiration. And so we're seeing a lot of these legislative positions expiring, and we're seeing a lot of states react quickly, California being one of them. They just extended their PTET rules to 2031, I believe. But we need to see more of that coming soon.
Okay. Tina.
Yeah, and from a corporate lens, right, the states are unpredictable. You never know what they're going to do, but if I had to look in a crystal ball and think about what I think the states are going to do, I think they're going to look at GILTI. Currently, GILTI is treated almost like a dividend for corporate state tax purposes, and most states allow almost a full deduction, or DRD, for GILTI. I predict that the states will look at that treatment and say, hey, we should at least be doing what the feds are doing. The feds are allowing a 40% deduction. I think this is a place where the states are going to look hard as a place to find budget relief.
Okay, and I do have one final question for you. So, states there are many states, so it's a lot to grapple with.
Yeah.
But I imagine companies are thinking about this. But if they have not dealt with or all of the issues that come under focus with OB3, where's a good place to begin?
I would say looking at your current Nexus profile. Where are you currently doing business, and where is the best opportunity to kind of maximize some of these benefits and opportunities we talked about? It's a great starting point. Obviously, there's much more planning to happen ahead, but if you can start with your current footprint and get a good handle of where your positions are and where you can make some changes, I think that's a great starting point.
Okay.
Yeah, and from a corporate standpoint, I would say looking at, again, your Nexus footprint, where you're filing, looking at that state blended rate. What is your state blended rate? And being able then to start modeling the different components of OB3.
All right. This was really great. Tina, Caragh, thank you so much.
Thank you.
Stay with Policy on Demand for more on OB3 and much more. We appreciate you watching. Take care.